Let's start with the top and bottom line. So it is a beat, $1.30 adjusted EPS, earnings per share higher than the street, 5 cents higher on revenues of $57 billion. Also higher not only than the street, but higher than buy-side numbers in regards to data center revenue, which is contributing about almost 90% of total revenue. So a big factor that is stronger, $51.2 billion. And then gross margins. We keep worrying about input costs, memory costs, et cetera. Gross margins coming in slightly above 73.6%. Street was anticipating 73.4. There is a very bold statement from Jensen Huang, the CEO of NVIDIA. Blackwell sales are off the charts and cloud GPUs are sold out. Compute demand keeps accelerating and compounding across training and inference. So, and he said we've entered this virtuous cycle of AI. So I'll go through it to get you some more numbers, but so far quite bullish. The stock reacting positively. Guys?
All right, Christina, thank you. Stock's up about 4.5% right now. Gil, I just cut you off, so I want to get your initial take on this.
Yeah, I'll finish the thought to say that their most important customers are Microsoft, Amazon, and Google. Those companies have all the customers, and they just told us 2 weeks ago that just in the most recent quarter, they saw a positive inflection point for demand. So they are able to rent out NVIDIA's GPUs years in advance, and they're building to that demand. That tells us they're getting positive cash-on-cash returns, which is the most important thing. Of all the things that are happening to NVIDIA, the most important thing is that those three companies, which represent most of the demand and all of the customers, are telling us they need as many NVIDIA GPUs as they can get.
Patrick Moorhead, want to get your reaction to what we've heard so far from this print, especially with Jensen Huang saying Blackwell sales are off the charts and cloud GPUs are sold out. Oh, all right. I think we just lost Patrick. Gil, I'll get your thoughts on that.
So the numbers are great. Again, the numbers right now are great. What's more important is that for the first time, so 2 weeks ago when Jensen told us about that $500 billion number, he was giving us the longest term guidance he's given in a long time. So that tells us everything is hitting as it should. They should be able to live up to that demand. So not only are the numbers right now good, but we do have more visibility into next year than we've had before.
All right, speaking of visibility into next year, let's get the guidance from Christina Partsinevelos. Christina.
So we have Q4 revenue guide. That is coming in at $65 billion, not only higher than the street, but higher than most buy-side numbers. Morgan Stanley, Bank of America was, guessing anywhere between, I should say guessing, but saying between 63 and 64 billion. So you can see this guide coming in at 65 billion. Same thing for Q4 non-GAAP gross margins. Again, this number is at 75%. Keep in mind, CFO Colette Kress promised that they would exit the year in the mid-70s, around 75%. So it seems like this guide is holding true to that promise so far. So again, shares reacting positively to this stronger guide that is even higher than what the buy-side houses were expecting.
All right, Christina, thank you. I know you're continuing to look at it. And the stock, Gil Luria, is still up 3%. This is an unusual response for NVIDIA after earnings. Often it's kind of sell the news, even when the news is quite good. Maybe some of this has to do with the way the stock has been performing lately. We were just mentioning, Christina Partsinevelos was how it's been underperforming AMD. But this also suggests with both a strong Q4 revenue guide and strong gross margins that there's plenty of demand at these high prices, right?
That's right. And what we've had coming into this quarter is all these concerns about NVIDIA. Very well-placed concerns. Scrutiny on CapEx. What's going to happen with China? Competition from TPUs. All the depreciation, as we've talked about. Circular deals. All these things are valid concerns. They put pressure on NVIDIA's stock, but sometimes the most important thing is the only thing. The demand for AI compute is growing so fast, the models are getting so good that all of these companies will need to continue to buy NVIDIA into the foreseeable future in order to be able to provide us access to the AI compute we want. Just yesterday, Google came out with Gemini, and we've been talking about how that's on top of TPUs. But the more important takeaway is that this is by far the biggest model trained on the most chips, which tells us we're still on the scaling for compute. So our models are still getting better, even though we're now using gargantuan clusters of chips to train them. That is a very good sign for the demand for NVIDIA.
Okay, we want to get back to Christina Partsinevelos for more from this report. Christina.
So it's actually now from the CFO comments. They put that on the on their website post earnings. And so what Colette Kress is saying is a shorter speech, or I guess report, and she is pointing out too that H20 sales were insignificant in the third quarter. I know Gil was just talking about China. H20s were geared towards China, but keep in mind last quarter too they spoke about H20 sales not going to China because of the United States, but because China is blocking companies from using those H20 sales. This two other points too have to do with gaming, which still contributes almost 9% of total revenue. Gaming fell 1% sequentially, and they're saying this has to do with just heading into the holiday season. Things normalize. Q4 tends to be a lot stronger. And then lastly, auto revenue, which is, up and coming, perhaps going to be a big source of revenue in the near term, but right now is only up 1% sequentially. But up 32% from a year ago. And that's because of their self-driving platforms. Guys?
Okay. Christina Partsinevelos, thank you. Shares of NVIDIA up about 3% right now. We got Patrick Moorhead back, so I want to bring him into this conversation as well. Patrick, want to get your response to the numbers. It was a beat and raise for NVIDIA, much better than expected. Strong commentary from Jensen Huang, and all of this without China. Your thoughts?
I mean, that's exactly what I'd expected. Beat, and a raise, and it makes sense, right? If you look at the near term, Blackwell is sold out, and there's unprecedented demand. And we can debate and we can argue that, it's frontier models and, there's no downstream to it, but we're still in this building stage. So there's really nothing to debate here. And then when I put the extra CapEx, the hyperscalers forecasted a 40% increase in CapEx into 2026. I think that pretty much secures 2026. So for the most part, we're talking about 2027, which is, can we get enough power? And is there enough downstream demand to monetize the previous investments?
All right. Well, James Demert back with us here on set. You already own NVIDIA, so you're happy. You probably don't sell it, but do you buy more?
I think if you don't own enough of it, you got to add more here, John. And I think a lot of people don't own it. I think a lot of people are just, again, underestimating how incredible these numbers can be. Probably going to be that way all the way into 26. So if I own it, which we do, a lot of it, we want to continue to have that position. If your position's not big enough, I think you use this chop. I mean, the stock's down 10% from the high. Here's a great window to go in there and acquire more shares. And I don't think they're going to have any problem with competition in 26. But let's keep in mind, the real risk in NVIDIA isn't the AI cycle because we're early, but it is the product. And you've got Google and Amazon coming along with some chips as well. And that could be something we look at in 26. But boy, this clear ceiling from here.
Yeah, Barbara Duran, who's here on set as well, also a shareholder. Barb, I want to get your thoughts on this report. We just talked about it, the fact that H20 sales were insignificant in the quarter, according to CFO comments. I mean, earlier today, you had Jensen Huang in Washington for this Saudi investment summit as well. And one of the headlines that came out of that is the fact that it looks like the U.S. is now greenlighting these advanced chips for investments in Saudi Arabia. How much does sovereign AI still have a role to play, especially if you do start to see a petering off in coming years of hyperscaler CapEx?
I think sovereign has a big role. And we haven't even talked about China because that's still very caught up in political ways. But that could be another, if they get permission to sell the Blackwell current generation chips, that could be another $50 billion to them. But the sovereigns are definitely coming. And it's with the hyperscalers at first. Those are the ones that are spending hundreds of billions. But the sovereigns will be quite large. And as long as there's not a political issue in selling to them, this could be big new markets that are happening. So the Saudi Arabians, are going to be one of many. And we've already seen, a bunch of the countries stepping up for this. So
we start off with that big NVIDIA bounce after hours. Shares are now higher by just about 4.5%. After the semi-giant beat earnings and revenue estimates raised its forecast, the conference call kicking off at the top of the hour. Our own Christina Partsinevelos has got the latest. She's here on set. Christina.
Two of the biggest numbers for this earnings beat and why you're seeing the stock actually swing quite dramatically has to do with the Q4 revenue guide. OAI, which came in higher not only than what the street was estimating, but higher than buy-side numbers. So at $65 billion, the buy-side for JP Morgan and, Morgan Stanley and Bank of America was 63 to 64 billion, so already higher there. And then gross margins. The company, Colette, CFO, did say that they were going to exit the year at 75%, mid-70s, and they were able to do that despite higher input costs. Like from memory, we were talking about this offline, and there were some concerns that gross margins would come down. So I think that is a huge, positive, and why we're seeing a positive reaction. Of course, Jensen Huang is going to speak to all of the strength, selling off the charts, for quarters and quarters to go. We can't keep up with demand, but I think these numbers really justify perhaps that short-term move. On the earnings call, though, we will expect to hear more about the $500 billion order backlog that they spoke about through 2026. He said it in October. It was very surprising that he gave that type of guide, before earnings and so far into the future. They don't normally do that. So that's going to be one. And then, of course, OAI financing is going to be another factor, too, as well as the sustainability, the general sustainability of demand.
Yeah, I mean, the numbers were great. And the words, the terminology that Jensen has used on the call so far in guidance, it's virtuous AI cycle, right? Off the charts. Everybody's computing everywhere. I mean, can't get any better than this guy.
No, and we had JC on Monday, Wednesday? Monday.
Jim Cramer.
Yeah, Jim Cramer. And we asked him about margins. He thought margins would be okay, and he was right about that. Tim was just on the overtime, and he talked about it. He did crush it. Talked about a muted response, and I think I would agree that this is somewhat a muted response. I'll say this: yes, the margins are good for them. But again, the magnitudes of the beat in percentage terms continue to get smaller and smaller, and they continue to be, in my opinion, rewarded the way they might have been a couple years ago. Now, this move, we'll see what happens in the after hours. I think it's a great quarter. We'll see how it sort of plays out in terms of the stock.
Yeah, I'm trying to broaden it out, like to their customers. Like, should Meta, Microsoft, Google, some of these others, should they be trading up off this? If you see margins improve sequentially, do they have more pricing power if they're sold off? If they're sold out of Blackwell, that sort of thing. So it's interesting because, Meta, we saw the reaction to their spend, and obviously a lot of that is going to NVIDIA, so good on you. And we already heard, as Kay Parks just said, that GTC, a few weeks ago. I mean, we already knew this. We knew it was going to be good. Listen, there's nothing to poo-poo here. They beat. They guide higher. The margins are better. They're sold out of their main product. But I guess I'm more focused on their customers because, to me, some of those, Microsoft and Meta, have barely seen an uptick since they reported a few weeks ago.
And they're not seeing much of an uptick in the after-hour session on the back of this. I mean, you could say that for every dollar that NVIDIA makes, it's a dollar taken away from the hyperscalers, reinforcing that notion that maybe that there is this massive spend with a questionable ROI at this point.
Right, that's the part, the questionable ROI. But I agree. I don't think that the hyperscale, they knew there was demand because they're demanding, right? And they knew how much capacity they could get or whether they get scaled back. I mean, Christina brings up the very important part. That $500 billion number is such a big number, and it's and it's for a year out, right? So that's a surprising amount of clarity for what could be, I don't know, maybe a difficult time. I do think what's changed from the last month is the demand is absolutely still there. But what is more expensive now is building the data centers, if for no other reason than because the debt has gotten more expensive. So to the extent that, maybe money isn't limited in this space, who knows? But if there's only so much money to go around and more of it is spent on interest, then somewhat less of it has to be spent on the rest of the AI build.
So are you questioning the quality of that $500 billion guidance?
One other thing I want to say about Jensen. Nobody manages the street better than Jensen.
Every single word you would want to come out of his mouth has come out of his mouth so far.
It's like
and we're
he
just
used
at the start
AI
of the conference call.
to say what is the most absolute best thing that
what can juice the stock higher? Virtuous cycle, off the charts. It's textbook.
But is that what you want him to say? I mean, I don't, and I think we've talked about it because I remember on GTC day, it was virtuous cycle was the quote. But I don't know. I guess I feel like I'll just talk about the stock in a vacuum, not relative to the market, but the stock by itself. What's going to happen here is you now have an analyst community that can upgrade the stock. That 500 billion plus for 26 was something that we heard, we liked, it was nice, but we all know that the street was probably 30% or more lower than that. You're going to see follow through on upgrades. I also just don't think, I know it sounds crazy to say that there's not a lot of momentum in NVIDIA NVIDIA stock, but there's more momentum in other parts of the market than in NVIDIA stock. I think the stock's going higher on this, independent of the market. I realize we have some important stuff coming down the pike, including a Fed and some other things, but NVIDIA on its own, this was enough to take the stock higher.
I'd like to join two of your comments. You talked about pricing power. Actually, it's quite strong. The average selling price, especially for the Rubin, the next generation, is much higher, and that's helping them maintain margins. But then that goes to your point with hyperscalers, right? That gets more expensive for all of these hyperscalers that have to spend $4.8 million on 72 chips in a Rubin rack versus, $3 million for Blackwell. That is a huge discrepancy when you're talking about buying millions and millions of, or I should say many and many racks. The other thing, too, is the halo effect right now. We're seeing a positive on AMD, Micron, TSMC, big contractor for these chips. So it is having somewhat of a positive effect on the market. And lastly, to your point about the 4% swing, most people thought this stock wouldn't move that much, given it's gone sideways. So isn't that quite impressive for a $4.5 trillion company? That takes a lot.
I think given the, Karen talked about this the other night, I mean, given the setup into this earnings release, it makes sense. We sold significantly off the all-time high, back and filled a little bit. So it does make sense, but I get what you're saying.
Meantime, let's bring in NVIDIA bull Chris Rolland, Susquehanna's senior semiconductor analyst. He upgraded his NVIDIA price target last Thursday to $230 a share from $210. Chris, great to have you with us. What do you want to hear from the conference call? It seems like Jensen's saying all the right things so far.
Yeah, I mean, the tone was incredibly upbeat. I expect more from Colette, who's speaking now, and Jensen soon to come. I think the biggest question, and you guys talked about it earlier, that 500 billion, what is that exactly? Could there potentially be upside to that 500 billion? We would love some more details.
Upside as opposed to down. We are talking about the 500 billion in the context of potential downside, but you're talking about it in terms of potential upside on that number.
No. Yeah. Is there upside potentially to that number? If that is backlog, can they get extra components together, extra sales, et cetera, and exceed that 500 billion? Currently, we're only at 450 billion in our model after this report. So there's still a 10% margin there to that 500 in street models. So we do think there is still upside over the next 2 to call it 3 quarters in terms of beats and raises.
Chris, speaking of margin, let's talk about gross margin. Let's talk about the numbers that again, they hit. They got where they wanted. I saw your notes. You wanted to see mid-70s, so you got there. Tell us where you think this number's going, and how much is that really the delta in your valuation?
Yeah, so there was some buy-side skepticism that they were going to hit that mid-70s. They did hit that in the guide. There was actually some adverse kind of numbers and puts and takes in there as well. So this was really healthy. I could see this going high 70s. I don't think we'd get into the 80s, though. At this point, gross margin is not as big a story from this point forward as revenue.
Karen, thanks for being on tonight. So the 500 billion, the upside that you are hopeful would come, does that come from adjacents like networking and software? That all GP? Where does it come from?
Yes. So the 500 billion number includes networking already. So that's compute, Blackwell, GPUs, but also all of the associated networking. That is a big number. That was above the street. Not quite the 30% that Tim was talking about, but perhaps 20 or 15%. We were still below that 500 number. But is that 500 number static? That seems to be a backlog number. If they could get increased component availability of things like memory, let's say, or front-ended TSM, could they potentially exceed that? And so these are the kind of details that we're waiting for on the call.
All right, I hope you're all doing great today. I'm going to talk about earnings in just a moment, but really quick, I want to mention some NVIDIA news we got today. Today it was announced that xAI, in partnership with Saudi Arabia's Humane, will build a 500 megawatt data center powered by NVIDIA systems. Separately, Jensen also announced a 100 megawatt data center for AWS with, quote, a gigawatt ambition and counting. Also, just a quick heads up, we get some important jobs data tomorrow morning, so be prepared for that. Now let's talk about NVIDIA earnings. This was a very solid quarter with very strong guidance. Revenue came in at $57 billion, beating both the consensus and whisper numbers. EPS was $1.30, beating estimates, and non-GAAP gross margins came in at 73.6%. Next quarter revenue guidance came in at a very strong $65 billion, beating both the consensus and the whisper numbers. Guidance for next quarter non-GAAP gross margins came in at 75%. You may remember that early this year, NVIDIA told us that margins would move lower as they would speed up Blackwell production, and that margins would return to the mid 70% range late this fiscal year. NVIDIA is delivering on that promise. Jensen also said, quote, Blackwell sales are off the charts and cloud GPUs are sold out. Compute demand keeps accelerating and compounding across training and inference, each growing exponentially. Now let's get into some of the interesting details that we learned from the earnings call. I'm just going to rapid fire multiple points that stuck out to me because we learned a lot of important details across many different topics. First off, Rubin is on track to launch in the second half of 2026. NVIDIA addressed the concerns about GPU depreciation head-on, with CFO Colette Kress saying that A100 GPUs shipped 6 years ago are still running at full utilization today, powered by a vastly improved software stack. This is in full agreement with what I've been saying for the past couple weeks following Michael Burry's recent post on X. The hyperscalers are not extending the useful life of GPUs in order to artificially boost earnings. Rather, they have come to the realization that the useful life of the hardware is longer than what they originally estimated due to two factors: NVIDIA's continuous improvements of older generation hardware through software, and second, the world being compute constrained in the face of extremely strong AI demand. Those are the exact two reasons NVIDIA leadership gave as to why A100s are still running at full utilization 6 years after they shipped. This is not a bubble. This is insatiable demand. Developers will use whatever compute they can get their hands on right now, and that, in combination with continuous improvement of the hardware via software from NVIDIA, extends the useful life of the hardware. Ignore the noise. Now let's get back to the rapid fire of important points from the earnings call. NVIDIA expects input costs to rise in fiscal 2027, but they are working to keep gross margins in the mid 70% range. NVIDIA does not see an AI bubble at all. They see the complete opposite. Jensen was asked to clarify the $500 billion graphic he showed on stage at GTC in October, and it is exactly what I've been telling you. He meant there will be $350 billion in revenue over the next 5 financial quarters, and $150 billion worth of GPUs has already shipped. The $500 billion number is cumulative revenue through both 2025 and 2026. And on the topic of the $500 billion, NVIDIA CFO said, quote, the number will grow. Jensen also said that with each new generation architecture, NVIDIA's share in the data center grows. Jensen said that NVIDIA's GB200 and GB300 are substantially ahead of the competition on inference. Jensen told us that the GB200 has a multi-year lead on the competition when it comes to inference. Keep this in mind the next time you hear someone say that NVIDIA systems aren't good at inference, because they're actually the best on the market at inference and most likely will be the best for years to come. Jensen was asked if his views on custom ASICs has changed, and he emphasized that AI is incredibly diverse, and you want to system that can handle a wide variety of workloads given that AI is constantly changing. Jensen was asked about NVIDIA's methodology in choosing whether to do share buybacks or invest in other companies. Jensen said that NVIDIA will absolutely continue to do share buybacks, and he also emphasized that every single investment NVIDIA has made has been a strategic investment to expand the CUDA ecosystem. NVIDIA is not simply throwing money around. They're making strategic, very high probability investments. Jensen was asked how the large spending commitments from companies like OpenAI, Anthropic, and others will be paid for in the coming years. And Jensen reminded us that these companies are the fastest growing companies in history, and their revenues are growing exponentially. They will be able to make the investments as their revenues scale. Additionally, Jensen told us that many well-known large enterprise companies will soon start spending big on AI, which will help fund the build-out. Jensen also spoke about the importance of agentic AI at length. And CFO Colette Kress also mentioned physical AI, saying that physical AI addresses a multi-trillion-dollar opportunity and, quote, the next leg of growth for NVIDIA. As a reminder, I'm expecting a surge in compute demand fueled by agentic AI that extends well into 2026, and then I think the next major surge of compute demand after that will be fueled by physical AI. There's a reason why I've been pounding the table about NVIDIA's physical AI business in recent months, and Colette reaffirmed why on the earnings call. In her words, it addresses a, quote, multi-trillion-dollar opportunity. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business, and I don't think this is getting enough attention right now. But I think it will get a lot of attention in 2026 and 2027. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested, and NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack, and this is not getting enough attention. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. Overall, this earnings report was fantastic, and the guidance was even better. I expect there to be multiple analyst price target upgrades in the days ahead after today's earnings report. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it. And I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day. And I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.